side of it. Welcome some new folks that are here. We're trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out. If you look at the chat box, you'll find the levels there for you. We use those in addition to any price action opportunities that might occur to give us our setups to trade. As we kind of floating around here a little bit, see where the market takes us. And we're looking to scalp the market, so we're trying to find areas of inflection. We don't believe markets go straight up or straight down. Consequently, we're looking for those opportunities that gives us areas where the market will rotate off of. But right now, we seem to be in a little bit of a range, so just kind of good, you know. So we'll see what happens. Obviously, market is also still absorbing the earnings as some of the big companies, big tech companies also are releasing their earnings as they come up here. Kind of just bouncing around here a little bit. So we'll see what happens. I mean, obviously, Google came out yesterday, Amazon. I think Apple might be today after it goes. I'm not. We'll see if we can find out. They haven't come out with their earnings. I don't think they have come out. But Facebook or Meta came up and they were really, they got dumped on pretty good. So we'll see. All right, we're just kind of hanging back here around our pivot area. So GDP came out, initial claims came out, so we have no numbers coming out this morning. Twitter will be no more on the stock exchange as Musk is taking it over as of Friday. They're delisting it. So if you have Twitter, might as well. I mean, I don't know what you want to do with it. So let's see here. All right, we are just kind of hanging here in this little range because no numbers were absorbing the GDP number that came out positive direction. Following two consecutive quarters of negative GDP growth, a technical session in the United States Commerce Department today will report out GDP figures. They'll provide a latest snapshot of the American economy. Forecasters expect the nation to grow again to July to September quarter, predicting an annualized rate of expansion of 2.3%. That obviously came out of 2.6%. That would mark a sharp reversal from the compared to the contractions of 1.6% in the first quarter and 0.6% in the second quarter. And may mean that the economy could weather more Fed hikes than previously expected. But the bond market rallies. There you go. See, I mean, this is why, you know, even numbers come out, everybody's saying, yeah, this is what should happen. The markets always kind of are always thinking ahead, you know. Or figured out that this is going to happen, so we come back here to our pivot. Kind of neutral right now. Can we post the levels again in the chat? For those of us who might have come a little late. Happens to me all the time. We'll get them up here in a sec. There we go. Thank you there, Don. All right, we are just kind of floating back here to our pivot, kind of doing nothing. It's okay, patience is important. All right. So again, we never know when we're going to get busy, right? We actually kind of side. If you take away the little rally we had yesterday, and we come back into the range, kind of range bound here a little bit over the last day and a half or so. We'll see what happens from here. So, I mean, we could be trying to consolidate here a little bit, trying to figure out what might happen next. Who knows? Jamie Dimon did say there's a lot of stuff on the horizon which is bad and could not necessarily and doesn't and could not necessarily put pressure on the U.S. Economy in a recession. It could put the U.S. economy in a recession. That's the most. That's not the most important thing we think about. We manage through that. Jamie Dimon said about the possible recession and the future investment reform. I'd be more worried about the geopoliticals of the world today, the relationship between the Western world would have me more worried, far more concerned than whether there's a mild or slightly severe recession in the United States. So that geopolitical situation is getting better soon. Now we come down here, testing the 47 area, right down to 47. Nice quick pop back up there to 50, so nice little nice little quick rotation here against the first level of support. Look away for a minute and then back up and I got filled right, so that's kind of nice. Those are the best trades. You're not looking for it, and you get filled. Exit strategy is perfect. It's just boom, boom, boom. We're looking for about 3, 4 points, 3 points. I guess these days are pretty good. Can't complain. Volatility is right there for us to be able to do that. So that was a nice little quick rotation there. And we're not keeled over on the floor. That was so good there, Chad. I had to tell you, you can't get over that. That's really good. That's funny. All right, so nice rotation there against that first support level there, 47. Good way to start the morning here. Again, we're looking for opportunities to scalp the market based on the levels you saw in the chat there. So they're there for us to use as the day goes on. I know yesterday afternoon, I think, again, that's why we talked about trading in the morning. Yesterday afternoon trade was more one way than anything else. Very tough little trade there in the afternoon. Gets that way, gets one-sided. And that's why we focus more on the morning hours. I mean, unless you're that kind of trader that you could just like jump on that, just kind of take the ebbs and flows with it. It's fine. But you know, it is what it is. I'd rather, straight the ebbs and flows that we have in the morning. Sometimes it's not even ebbs and flows. So, we get run over easily too. But it is what it is. But the afternoon definitely has its own set of dynamics, different than the morning. And that's why we focus more on the morning hours. All right, nice rotation there. It was also our blue band, so I'll give you a couple of reasons maybe to get in there around the 47 area. Again, any opportunities that we have, whether I talk about it, or whether they're the levels, or whether they're price action opportunities, or talking about our education course, any of the stuff interests you, like to add to your knowledge of markets, or expand them a little bit, or learn a little bit, this is where we like to come in there. All right, just kind of hang down. All right, back here at our pivot, so kind of very neutral. But we did go down to our first level of support there. Came back up. Kind of very neutral little trade here for us right now. All right, coming back down there a little bit. The next support level we have is down at the 40 area. Continue to slow down, take it a little bit, bounce, rotate down. Remember, we periodically during the day sometimes start trading with bond, especially in the morning. Lately, it's been trading with the bond market a little bit more than anything else. So we quickly come down here to the 40 area. The 41 is the settlement price as well. So just kind of hanging down here. Very light, thin market. It's not like there's no underlots anywhere, but not that high ticket. Very kind of strange, right? I think so. So very a little bit thin. Be a little bit careful here. All right, coming down here to the 40 area now. Not bouncing that much. All right, coming down there. We got 30 next is our next support area down below. It's quite an interesting little move here. 20 S&P. This is what happens in these markets. You get these like one-way moves for like, I don't know, something happened in the bond market there. Kind of having that same reaction here in the S&Ps. Talk about that all the time, how, at least in the morning hours, that's been happening more often than not. All right, we'll continue to down tick here a little bit. And we're looking at 30 down below is our next level that I might focus in on. And continue to down tick here. Down to 33. And like I said, we're not going to love any trade we have. We're just going to scalp the market. And if we get that opportunity, that's great. If we don't, that's okay. We'll look for the next opportunity. Right now, we're looking at 30. We never know when there's some numbers that comes out. The ECB is supposed to put out their I think they're supposed to raise rates this morning. Maybe that's coming out right about now. I'm not quite sure. I've been trying to find it this morning about if they did, but it's not doing that right now as well. So you get, you're getting outside influences here. That's why, again, we are all of a sudden you get this volatility surge right? And a one-way trade coming down here to the 30 area. And it kind of ran through a little bit again. Just when you get this one-way trade, you gotta like either try to expand your stops a little bit or just wait for it to settle down. Just because we don't know what is hitting the market at this particular moment in time to create the volatility. Also, you can see here, like I said earlier, it's very, very light on the ladder ticket. I mean, now they've got at least 50 lots on there. Prior to that, it was very light. I think there was some news coming out that's creating this little move here. And again, I didn't have it on my list, and I've told you this before. If you don't know that there's a number coming out, you can always look at the ladder ticket and see how much bids and offers are in there. And it was very, very light just before this little move here. I wish I could have, you know, I noticed it, but I just didn't realize that it was going to create this much volatility. So I think there's something going on in the background because we don't usually. I mean, it was a nice little orderly trade until the last 10 minutes. Like I said, we don't know what's going to happen, and we don't know when it's going to happen. All we could do is trade the markets, and this is what happens all the time, right? European market spillover as well as euro itself will come into focus this morning as the ECB gets ready to lift its main interest rates to the highest level since 2009. Policymakers are expected to follow in the footsteps of the Fed, which has raised rates by 75 basis points past three meetings by pushing the ECB deposit rate to 1.5%. Inflation across the bloc has already soared to 10%. An energy crisis this winter triggered by Russia wars in Ukraine could exacerbate the economic situation. So again, we never know when there's that volatility. All we can do is trade it, whatever the market gives us, and that's why we keep our stops in place so we minimize any losses that might occur when we do get some volatility like we have in the last 15-20 minutes where we break, what is that, about 30 points now, right, without even a rotation. So it's kind of, again, we don't know when this is going to happen. I wish we could tell you that it was going to happen, but I can't. Facebook is taking a beating, right? They lost, it says here, lost $85 billion in value since the close. Oof. More than the market cap of General Motors or Ford. I mean, those little tidbits of information. All right, well, we're on the lows here. And kind of bouncing back here a little bit, see what that does. All right, continue to stay weak. We're looking at the 22 on the downside. Oh, look at that, 500 lot there at the 25. First big order we've seen there in the market. I don't like that. But again, it's a little bit. At least there's like 50 lots in there now. And then the guy just moved his 2,500 lot down to 24. You see that he's playing around with the market a little bit here, whoever that is. All right, get going down here a little bit. Staying here on the lows. Next support level we have is down at the 22 area. Again, something's going on here in the background. Could be look at the bond market reversed. So yeah, we talk about like following the bond market, but sometimes it's not always the case. Okay, seem to have based out there when they get down to 25.5 there. All right, market's staying here on the lows a little bit. Yields on the 10-year now below 4%, so they've been all over the place. Now we're just kind of hanging on the lows. We've got resistance still, maybe around the 42 area. All right, seems like the bonds have slowed this progression to the downside here. Rotating back up here a bit again. I think we're taking a look at the bond market there, kind of helping us with the rotation to the downside, now helping us back up. But it was a tough little trade there to the downside. Something happened there to create that push in the bond market that we just kind of followed. And now we're just kind of following it the other way. A little delayed reaction though. Uh, no, the 40 popped up to 42 really quick and then continued to push down. So you'd have to have 2 point rotation there. But no, if you didn't do 2 points, you had to get you got stopped out of both of those. It's a good thing you did. And whatever rotation happened there is definitely a bond market. Bond market broken, and we kind of followed it. And bond market rallying, we're going to follow that too, I guess. Coming up here to our blue band. This is getting a little bit nutty. Testing our blue band area here a little bit. I think we get up here so fast, but they flushed right through that too. So everybody got caught a little bit short there, sending it right up to our blue band there. So nice rotation against our blue band there. If you did have showed some patience there and got in there instead. All right, nice little fall off against our blue band, and that one helped. All right, we bounced quickly right up to our blue band area there and then bounced off. You see the levels there in the chat. Kind of ran through the 30 and the 40 there, whatever happened there in the bond market for that 15, 20-minute period created that volatility there. The next level, a little resistance would be on their pivot there. If we get up there. All right, got back into that range that we talked about. They extended just a little bit and then made a push back into the range. Again, bond market, I think, is still dominating here and created that push to the downside and then right back up here into the range as the bond market recovered from whatever rotation it had, 20 minutes ago. And look, we're going to be, we have no choice. Sometimes that's going to happen to us, and we just got to keep your stops in place because we never know when these, whatever happened or occurred there, which I'm trying to find out if it was a reaction to the ECB or what, but I still haven't seen anything. So it is what it is. All right, now we continue to uptick here. Looking at the 55 is a little resistance if we do have any. Otherwise, we'll look at our upside resistance there at 67. That's our next resistance area. It's not whatever influences that market had here that created a push that downside. They're saying it was all fake. Can you continue to push up here, looking at our 67 there? And some of these other opportunities that I'm talking about, definitely price action opportunities, not for everybody. Depends on your risk tolerance. Bonds here are staying strong on their interim highs, and I think it's creating this push here in the S&Ps. They were just faking what they did at half an hour. They were just joking. It's crazy stuff, right? Now 67 is our next little resistance area here on the upside. Let's see what it wants to do there. Again, it's a little bit too volatile, then just step back. But as our first resistance area up on top here, it's almost going to give you more levels to the downside. But I said, nah. Okay, bonds continue to rally here, and we are continuing to push to newer interim highs. We're hanging here, and both bonds continue to push up. So be careful there if we're going to watch the bond market here. Kind of goofy right now. What's going on there? They reversed. We reversed. They're making new highs. I mean, they're liking this GDP number. Hey, a good number, and they like it. What's happening here? All right, now we continue to uptick here, so be a little bit careful if you're going to trade it, only because of what the bond market's doing. Just trade a little bit smaller against that 67 area or not, depending on how aggressive you want it to be. All right, coming up here to the 67 area now. You got in there at 66. You're getting a nice little quick rotation here off of it. All right, nice little rotation there. If you got in there at the 66, got up to 66 and change. So maybe, obviously, we're not going to be perfect here. So hopefully you were able to scale in there a little bit. Give us that little nice little rotation there. Obviously now to 67. If you had 67, it's and you didn't get filled, it's not going to be. I would not be using it anymore. All right, nice little rotation there against our 67 area. All right, nice rotation there against the 67 area. Right now, we're looking at the next level on the upside is up at 79. All right, you can see it did get up to 67 and change if you traded the 67. Again, it's a little bit more riskier, but they did push back up and then come down. If you look at the chat, you'll see the levels that we gave out this morning. Thanks, Don.